Okay. I have the link posted in the Discord for anybody that wants to watch live, if anybody's here. But I'm going to go ahead and start. It's a pretty easy week if you are reading the book and following along, because chapters 9 and 10 are actually really small, and there's just not a lot to talk about with them because they're pretty cut and dry. So moving on to the references, it's literally just 5 slides this week, so let's go ahead and get started. So chapter 9 is about ETFs and inverse charts. We see it all the time in the Discord room. Like if somebody's like, "Oh, why is ES falling?" and then they'll look at Amazon or Microsoft or Apple and be like, "Oh, well, Apple can't hold support to save its life." It's the same thing. Like if you're having trouble reading a bear trend, right? Well, then just go to inverse the charts. It's usually an indicator on NinjaTrader. It's an indicator that you can download, and maybe that would make things easier for you. But let's move on to chapter 10. Second entries. I talk about this a lot when I trade live, and I'm not going to hammer it down too much, but essentially, whenever you guys see me trade second entries, some people will be like, "Well, what the heck? You're buying or selling at a worse price, or you're taking a chance sometimes, and blah blah blah." Well, it's because second entries are more reliable than first entries, and if you want better probability, then you need to wait for second entries. Essentially, what they are is it's 2 attempts from one side to change a trend. So look, this is from yesterday's trading action on the Nasdaq. We have you can't call it a bear trend from the open because it's bars 1, 2, 3, but possible trading range. There's a bull gap today, so decent chance that we go to fill that gap. Well, bulls want to try to go higher, obviously, so they get a first entry buy with bar 4. With bar 3, their signal bar. So this is your first entry. And we don't actually pull back until bar 9. So when we actually pull back on bar 9, then you have a second entry long with bar 11 with your signal bar being bar 10. So you either buy the close or you buy 1 tick above. Preferably you buy 1 tick above bar 10. And your entry bar is actually bar 11. And obviously you never know what's going to happen afterwards, but this is a fairly common scenario with second entry buys and second entry sells. So essentially what's happening, right, is you are waiting for buyers or sellers to show up and create a higher low for buyers or a lower high for sellers. Better, for buyers if it's a double bottom higher low, which in this case it was with bar 10 and bar 5, and better for sellers if it's some sort of double top lower high. So that's what you're waiting for, and your entry will be worse than the first one, and that's true, but you're paying a premium for better probability. Okay, because how do you know that this bar 4 is going to look the way that it does after a bar like 3? You don't. And I guess the argument could say that you don't know that the bar 11 is going to look like this after the bar 10, but the probability of getting a nice bull bar afterwards is very strong because look, you have a double bottom higher low, second entry buy. More bulls are willing to buy than bears are willing to sell. And that's essentially what the second entry is. You're paying a premium for better probability, and I talk about a lot in the Discord chat the relationship between probability and risk to reward. It's always inverse, but second entries still give you good swing opportunities as well, which is why I like to swing second entries. The other part about second entries that we should discuss is second entry traps. And it's important. The most common type of trap that will happen with second entries are second entries that give you a better entry than the first bar, and that's what this chart on the right will tell you. So you have a first entry sell with bar 13, you sell one tick below bar 12, and we don't want to take the first entry sell, but it's good to know the numbers. So when we go up, we actually created a higher high, not a lower high, but irrelevant to this conversation. But then you get a second entry sell with bar 18. But look at where you're selling. You sold down here at this price, basically where bar 13 closed. And now your second entry is a better entry than the first entry. And why is that a trap? Well, it's a trap because a second entry should give you better probability. And you've waited long enough to get to second entry for more information, okay? So that price should be worse than the first sellers or the first buyers. If it's not, then it's probably going to be a second leg trap, and in this case we'll just end up going higher. But that's essentially chapter 10, second entries. And then some words of wisdom. Again, it's a short 2 chapters, but I like this one the best that I was reading. Most of the time, a good fill equals a bad trade, and a bad fill equals a good trade. Now, why does Al say this? Okay, this is in the second entries chapter. Well, think back to the second leg trap. Okay, think back to the second leg trap and think about the relationship between probability and risk to reward. Earlier today, someone messaged me and they were asking me, like, how do I manage stops? Or where would I put stop losses? Because I'm scalping and, I get these losses that wipe me out for a day, etc., etc. Conventional wisdom, if you get your information from, FinTwit or whatever, they would tell you only take trades that have a 2-to-1 risk to reward or better, but that's just simply not the only way to trade. Scalpers constantly take trades that are 1R or worse. So what are they sacrificing for that probability? Or what are they gaining for that probability? They're gaining probability but sacrificing risk to reward. So with that kind of logic, most of the time, a good fill will equal a bad trade, because in this instance of a second leg, it's probably a trap. And as you can see, we ended up going higher and you're stopped out. But yeah, that's pretty much it for this week. I'll sit here for a second and take questions, if there are any. Okay, I don't think there's any questions, so that'll be it, my friends, and I will be here next week to do chapters 11 and 12, same time.